Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, the first word that comes to our minds when we think wholesale is bulk and good prices. Well, in this world of wholesale purchase, you can even buy health insurance policies in bulk. Well, what we mean by this is family floater plans for your family. Now, these are very popular and they make good business sense as well. It'll save you some money. To help us understand the concept and features in detail, we have with us Yashish Thaya, CEO and founder of Policy Bazaar. You know, Yashish, family floaters are quite important, but virtually none are sold. 3 to 4% are sold. Whereas, you know, if you look at the constitution of a family in percentage terms of the population, would be probably what, 60-70% of the country. 60%. Why is that? I mean, is there a lack of understanding, or what is it?
I totally think there is a lack of penetration of health insurance. So if you look at health insurance as an industry, most of it is sold either. So about 2/3 of health insurance is either sold to the government or to corporates. So it's somebody paying for somebody else. The concept of somebody going out, understanding a health insurance policy and buying it for themselves is while it's growing at about 30% a year, it's still a limited concept. And health insurance, if you notice, is a very small fraction of the entire health, basically family floater health insurance plans are a small fraction of the total health insurance of the industry. It's very surprising because, as you rightly point out, pretty much anybody below 50 would be part of a family, except for a small sliver of age between 25 to 30, when people would move out of their homes before they get married again and become part of another nuclear family. So that's the one point where you could argue you're not part of a family, but otherwise 80% of the population will belong to a family, and hence you would like to see family floaters, which are far more efficient than individual plans.
So basically what you're trying to say is that as far as health insurance is concerned, there seems to be this overwhelming, everybody is buying individual health insurance policies even though they are part of a family. And it does make sense to buy health insurance as part of a group, a family of 4 or 3.
What I'm actually saying is very few people are buying health insurance policies in the first place. At all.
And on top of that,
which is why about 2/3 of all policies sold by premium are either done by the government or done by corporates. Only 1/3 is individual covers, and within that, family floaters is a small part. So for a family which has got children and which has got the adult members under 50, a family floater makes perfect sense, because it's very unlikely that all 3-4 people are going to fall ill at the same time. And hence, if you have a group cover rather than individual cover for each individual, it's likely that your costs are going to come down, because the company basically makes a bet that, if there are 4 particular members, not everybody is going to fall sick at the same time. Somebody will fall sick one year, another year somebody else will fall sick, and hence the costs balance out, because the company is taking, unless somebody has a chronic disease where there's repetitive nature of the disease, or somebody's gotten above 45, above 50, where chances of disease are
so let's break it down. How does a family floater work, and what are some of the advantages that say a family will get once you actually get a family floater in terms of costs?
Sure. So let's say there's a family of 2 children, 2 adults. The adults are 32 and 35, and the children are, let's say, 3 years old and 5 years old, right? That's a typical young family. What they can do is they take a 5 lakh rupee family floater plan. Now, what that implies is any member of the family, whoever, can consume that 5 lakh rupees. One can consume all of it. One can consume 3 lakhs, the other one can consume 2 lakhs. They can consume it in groups. Some of these plans have got restore features, etc., so it can grow over time. But that's the basic construct of a family floater plan. What it says is you got a total sum assured of 5 lakhs. Anybody in that group can use it. Now, instead, if you took an individual plan of, let's say, 5 lakhs each, that would be very expensive, because you would be paying 4 times. And it is very unlikely that, think about it, how often is it that 2 people in a family fall very seriously sick at about the same time and have serious health costs? So that it's unlikely, and hence family floaters make a lot of sense from that perspective.
What about waiting periods and exclusions as far as family floaters are concerned?
They apply just like they apply in individual plans. So family floaters also have exclusions. So there would be a maternity exclusion for at least 2 years. It could go on for 4 years. There would be the standard exclusions for most of the diseases. There would be certain permanent exclusions like cosmetic surgery, etc., which would be forever. And these exclusions would apply to all members of the family equally. And of course, once those exclusions are over, all members of the family can together start availing of those facilities.
What about the downside? Are there any points that one needs to keep in mind and say, all right, I need to be aware of this fact?
See, whenever one is buying a family floater plan, one should buy small personal accident plans also. And I'm talking about temporary disability or temporary accident cover here, not permanent. The reason is, if one incident where I can think of where sudden cost can appear on all members of the family is, the unfortunate event when all members of the family are in the same car and there's an accident and everybody suddenly has an accident and there's a big cost. And that is where the family floater will not suffice well, because if everybody has 2 lakh rupees cost, the total becomes 8 lakhs and breaches the family floater levels. So for a personal accident, I would advise individual covers. Also, I would advise critical illness plans to be individually covered, because critical illnesses are those diseases. If one individual has a critical illness, that means the other 3 members of the family, if it's a 4-member family, suddenly do not have cover, because the critical illness will consume the entire family floater right away. If any one person has a chronic disease, that means you're pretty sure costs are coming again and again. And they had been foresighted enough to buy a health insurance plan before they got into a chronic disease, because nobody's going to offer you a good health plan once you've got a chronic disease. You bought it in advance. So you've had the foresight and the insurance company's taken the risk, and now they have to pay you for that cost. It's better to break it up into an individual and a separate group at that point, primarily because that person will otherwise consume the entire family floater pretty much every year. So those are the few conditions. And when one gets older, at about 50, plans should break out and individuals should go into individual plans rather than family plans. Again, for the same reason, because chances of chronic disease, chances of frequent use of claim increase, and at that point, family floaters start to make lesser of a sense, rather than at a younger age.
What about loading? When does that take place as far as the family floater is concerned? And also, what about the renewal process? Is it simple? Do the costs go up? How does that work?
So the renewals work just like an individual plan. The entire family floater, it's automatic, guaranteed renewal for life. Of course, as I said, at some point one should break out into individual plans. So when the children turn 25, they automatically need to move into individual plans. The good news is, if they are covered under a family floater plan, even if they develop a disease, which can happen unfortunately even at a young age, when they turn 25, they are guaranteed the individual cover under essentially the the rollover schemes that we have, the portability schemes that we have. So whatever benefit they have accrued, that gets rolled over to them.
Bonuses and
basically all your exclusions, wait periods, etc., can be finished, because as you move out of this into an individual plan, you will get those benefits.
So from a child, continuity remains. That's what you're saying.
And as people get older, at about 50 or so, they can move out into their individual plans. But until then, the floater continues smoothly. So I would say a family floater is essentially a 10 to 20-year health insurance plan, out of which everybody will move out into their individual plans at some point. And that's how one should see it.
Right. For the benefit of our viewers, let's go into a point-by-point, advantage vis-a-vis, between individual health insurance plans and the floater plans. I mean, can you give some pointers towards that?
They are very, very similar in many ways. So from a health coverage perspective, from an exclusion perspective, from a capping perspective, from a what is covered, what is not covered perspective, inclusions, exclusions, pre-hospitalization, post-hospitalizations, individual plans and family floater plans work very similarly. The big difference between an individual plan and a family floater plan is that a family floater plan is like a small group, which is a family. Any one individual can consume the coverage. So you would typically, if you're taking an individual coverage, for a family, you would take about 1.5 times that coverage. So if you're taking 3 lakh rupees individual cover for everybody, instead of that, you could take a 5 lakh cover for the group, and that should largely suffice. It's basically pooling of risk. You're pooling the risk of the family. Somebody is young, somebody is old, one male, one female, different kinds of diseases, different stages of diseases. So it just pools that risk, and it makes sense for, the actuaries have worked hard at creating these products. I think families should take advantage of them. But otherwise, there is no real difference between these and individual plans. Of course, there are senior citizen plans. There are children-specific plans. Those are different. The senior citizen plans will usually have more of a co-pay element, there will be certain capping, certain diseases will be excluded. So there'll be, they may or may not be medicals at a senior, but at the stage when you are under 45, individual and family plans are pretty much the same. The family plans come out to be a lot cheaper instead of taking individual plans for everybody, and they come out to be more useful because one individual can consume the entire amount, 3 individuals consuming the entire amount. So there are many ways of consuming.
So what are some of the plans available, and how should one hunt them down? Because there are a lot of choices in the market.
Well, there are about 20 companies in the market, 22 companies in the market that are offering health insurance. So everybody has family floater plans. If you're going about it, ICICI, Bajaj, Tata, they all have family floater plans. When you're looking at all the government companies have got family floater plans. So Oriental, National, United, they've all got family floater plans. Your health specialists, which are Max, Bupa, Apollo Munich, Religare Health, Cigna, Star Health, all of these have got specific health insurance plans. There's a huge array, so it's not a question. One could kind of cater to that in maybe multiple sessions.
Right.
That which one is right for which reason. But everybody has their advantages. So just to kind of run you through, you would get a plan from, let's say, a Bharti AXA, which has got a slight cost advantages. You get a plan from let's say L&T Insurance, which has better critical illness and personal accident coverages attached. So those kind of situations are covered better. Max Bupa has got a lot of features. Apollo has some efficiency advantages. Religare is a simple plan, covers a lot of stuff. So everybody has slight twists and turns about why their plan is better. And there's a lot of innovation going on. They're really competing.
So what you're
with
saying
each other.
is do a cost-benefit analysis as far
yes,
as these
and
plans before
there's
family goes in and says, okay, we're going to buy it.
It's not a simple product any longer. It's got a huge amount of features, a huge amount of benefits. So I would find it almost impossible to just say one health insurance plan is best for everybody, right? So I think they are very comparable companies, and they have their unique features. So for example, an Apollo plan, you can keep increasing the cover till it almost doubles. So, and it happens without any additional cost to you. In a Religare, that happens at up to 50%. So there are various pieces, and you can't really say somebody wants A, somebody wants B. So I think a fair comparison is almost a must. An individual must go in for that, compare 5-6 plans, shortlist, compare them, and then really make a decision.
Right, Yashish, it's time for a short break, but we'll continue our discussion. We'll also take viewers' questions, but you can write to us at ask.policybazaar.com, or you can tweet us at policybazaar_in, and we'll see you shortly after this break. Keep watching. Welcome back to Policy Bazaar. I'm Arjun Bhagat, and with me is Yashish Thaya. Yashish, we're talking about health insurance. Why aren't we as Indians buying health insurance? I mean, given our population, given that healthcare costs are going up, medicines are and accidents are happening, and and our lifestyle demands that we have good health insurance policy, but it's not happening. That's what you say.
Yeah. So when we are looking at consumers coming in, we find basically 3 categories of consumers. One, where an incident has happened in the last 6 months. So either a neighbor or a relative has fallen seriously ill. They've become aware of the large cost that neighbor or that family person had to take on. So they're kind of scared of that, and they're saying, okay, can I get a health insurance fast? The second group of individuals is they've already developed a disease, and now they're really scrambling for somehow getting a health cover and not getting it. And companies are refusing, and they're really trying hard. How can I get one? How can I get one, right? And there is a third smaller group, which is on its own coming in and saying, yeah, I think health insurance is a good thing to have. Nobody's really fallen sick in the last 6 months that I know. And that third one is small. So remember, the one can be the neighbor. It doesn't need a neighbor to fall sick or a relative to fall sick for the individual to fall sick. Right? So it can happen to anybody. It can happen to anyone. And a chronic disease can appear anytime. I was just in Bombay yesterday, and I have a friend who's 35 years old, very fit. He's just had a heart attack, 35-year-old. So, not just our habits, the pollution, everything. We are, not the healthiest country in the world. We are the world's capital for heart disease, for lots of diseases. Let's not want to go over it. But the point is, health insurance is not that expensive. It costs roughly about 5,000 to 10,000 rupees. For people, it's about 1% of their income. For people, you can spend 1% of your income on health insurance and get a decent cover, which is basically what I was talking about. So why people don't do it, why people don't believe it can happen to them, I think it's just inertia or laziness, or all it takes is one person falling sick and then four others.
And given that our health infrastructure, we don't have a really good public health system in the country. Like
I think free healthcare. I would challenge most middle class or upper middle class people to go and avail the free healthcare system in the country. I don't think they would do it.
Right.
So that is out of the question anyway.
Right.
And of course, if you're going to end up in a tertiary care hospital, you're going to be spending a huge amount of money.
Life yeah, that's true.
So there's a saying, there's a very unfortunate thing that somebody once mentioned. A lot of people will spend up to 80% of their savings in the last 40 days of their life, because that is how expensive healthcare is, and that's a very unfortunate situation. They could have passed it on to their family, that could have been used better, and they didn't have to get so distressed in the last days of their life about healthcare costs, and those climbing up at 50,000 rupees, 25,000 rupees a day. So it makes a lot of sense to have health cover before you need it.
So with that very sagacious advice, we need to take viewers' questions. Healthcare, as we've been stressing, is very, very important. We've got Yash Singla from New Delhi. He says, I'm working with a software company for the last 9 years. I recently got married, and before I could add my wife as a dependent in the company group insurance policy, we came to know that she's pregnant. I added her in our company's group health insurance policy. She's 3 months pregnant. I would like to know whether it qualifies for the waiting period of 9 months to apply the costs for the company to take.
So it totally depends on what contract the company has, but maternity is covered from day one in a lot of corporate policies. So it depends on what policy they have. And usually if a new employee joins and they are pregnant, that is covered in most of these corporate health insurance policies. However, if your policy is a very specific one which says 9 months from the date the individual joins the corporate group policy, which is very rare, but if your company's HR has negotiated that and reduced their costs further, then of course you would not be covered. But in 90% of the cases, maternity is covered by group cover.
So he basically needs to go and check with HR.
Yeah.
Right. We've got Mr. Mathur from Mumbai. He says, I've taken Reliance Life Insurance Endowment Plan regular. In this, there's a loan facility. How much can I take? He asks as loan, and how to repay the loan. Yearly premium is 16,000. Sum assured is 3 lakhs. Reliance Endowment Policy.
So basically, 80% of your termination value or surrender value, which at the end of 3 years is roughly about 30 to 40% of all your premiums paid. So if you've been paying 16,000 rupees per year, and if you've paid it for 3 years, you've paid about 48,000 rupees. Roughly about 30% of that is about 15,000 rupees. So 15,000 is the loan amount you could take. It has nothing to do with the 3 lakh rupees sum assured. So your loan is not dependent on a sum assured. The loan is dependent on premiums paid, and it can go up to 80%, not of premiums paid, but 80% of your terminal value, or what you would call surrender value, which is much lower than the premiums paid in most cases. So please do not buy insurance plans to take loans. That's absolutely wrong advice if you've been provided that.
Right, we've got Sachin Ahuja from Kolkata. He says, my agent says the rate of return of LIC Jeevan Saral is 8%. Is this true? He asks. He says, I'm 42 years old and have an income of 10 lakhs. My policy term is for 28 years. Sum assured 6.25 lakhs at 12,000 a monthly.
Simple answer is no. You cannot get 8% return. You would be very lucky to get 6%. So if things really work out favorably, you'll make about 6%, 8% certainly not. No endowment product in the country. I say this again and again. No endowment product in the country, no fixed return product in the country can give you a 8% return. The best you might be able to do with a product of that sort is about 6%.
Right, we've got Pratik Mehra from Kalka. He says, I'm looking for a term plan for a maximum term cover of 50 lakhs to 1 crore. I've checked Aegon Religare iTerm plan. Can you review this plan and give me some of its benefits?
It's a great plan. It obviously provides you the life cover. In addition, you have various benefits which come in, like terminal illness and disability riders, etc. I would advise have a look at the other plans also. There are some plans which have come in with income benefit. I think those are also very good. So income benefit, essentially looking at two different concepts, right? One is if an unfortunate event happens, the individual gets, let's say, 50 lakh rupees in one go, versus receives maybe some amount, not 50 lakhs, but maybe 30 lakhs upfront and then receives a certain income for the next 15 or 20 years. I think the income part is very beneficial to consumers. I strongly recommend it, primarily because suppose an unfortunate event were to happen to somebody and their children were still young, that money may or may not become available for their children to use as they grow up when they are 18, 19, because that's the time when you really need your children to be supported. Like you need the children to be supported for the next 15 years or 20 years or so. So having some kind of an income support helps. Having some upfront also helps. So I would strongly urge you to also look at those products. There are quite a few. And even Aegon's coming up with a new one which will have those facilities available.
Thanks, Yashish. Now that's all the time that we have on this show, but you can write to us at ask.policybazaar.com or you can tweet us at policybazaar_in, and we'll see you next time. Goodbye.